Welcome back. We have the head of research at the financial derivatives company, Damilola Akibemi, who's right here with us in the studio to talk us through some of the latest burning economic issues. Good morning, Damilola. Thanks for coming on the program.
Thank you.
So we've seen the federal government tell us now that there's going to be a planned closure of the Third Mainland Bridge from July the 24th, and that will be for about 24 months. We know the implications of this, of course, talking about the traffic implication of this and the fact that it's estimated that every hour of additional traffic costs $1.97 million. So yes. Where does this leave us?
Well, yes, because of the state of infrastructure in Nigeria, so you need to actually rehabilitate the road structure and what have you. And definitely for every hour of traffic, or the amount of hour you spend in traffic definitely has its cost implications. There's the economic implication. There's also the cost to productivity because you spend longer hours in traffic, you get to work, you're tired, you're not as productive. And if productivity drops, definitely output levels will be affected. And if output reduces, revenue too will also be affected. So it just also raises the issue about the fact that for a populous city or densely populated city like Lagos State, our means of transportation are quite limited. I mean, we have the waterways they are not taken advantage of. In cities such as London, India, where they have densely populated areas, they have the rail system. So why can't we take advantage of that? So definitely the infrastructure system in Nigeria needs to be looked in and looked upon. And also even just looking at the road network, there are very few options because once the Third Mainland Bridge is closed, your other options are maybe Carter Bridge or Echo Bridge again. So definitely there needs to be an expansion of the road network. We need to take advantage of the waterways and other means of transportation such as the rail system. And
perhaps more companies need to actually embrace the idea of working remotely to, of course, reduce the amount of cars that we have on the road.
Definitely, and with COVID has forced everyone to adopt the virtual means of working, and so definitely, so I'm sure, as for instance, in Lagos, the amount of traffic has reduced. So with that focus or shift towards virtual work, towards teleconferencing, so the pressure on the existing infrastructure definitely is reduced, and also even gives the government ample time to actually maintain this infrastructure. So definitely virtual conferencing does, and virtual work does have its advantages.
We're still talking about transportation now. Of course, some of the airports are set to reopen this week for domestic flights, and yesterday we spoke to the DG of the NCAA, and he told us that all hands are on deck to ensure the safety of passengers, as they travel. But then, what is your assessment of preparations for this so far, the FDC?
Definitely the aviation industry and the regulators at least they've done quite a few things to actually ensure that they meet up to the required regulation and whatever. But also there's that sense of responsibility for each person to ensure that, okay, protective measures are being adopted. And 2 airports are going to commence operations tomorrow. That's Lagos and Abuja. And these are key cities. One is the commercial hub, the other is the state capital. And definitely the impact would be significant because then it also encourages output. It also encourages to boost economic and business activity levels. But if you're going to compare Nigeria with its peers, definitely there's still a lot that needs to be done. And to actually get to that level of ensuring compliance to the protective measures, ensuring that even the people, the officers that are on ground to ensure that people adhere to this washing of hands, temperature checking, and all that, actually do their job. It takes a collective effort from all stakeholders.
All right, now let's talk about the IMF. Now, of course, recently the fund predicted yet again that Africa will need more financial help to avoid long-lasting terrible consequences as a result of the COVID-19 pandemic, and saying that the continent faces the worst economic shock since the 1970s. Is there really no end in sight to all these gloomy predictions?
First of all, Africa, the continent, if you compare it with other continents, it's not as developed. And you have a lot of, in terms of infrastructure, we just talked about the infrastructure system in Nigeria. Most African economies have very weak, poor health facilities. So in order to actually combat or address these challenges, that the resources are not that available. And again, if you've also looked at the fact that there are other challenges that the continent is facing prior to the COVID pandemic, pandemic, we're already experiencing oil price shocks for the oil-producing economies. There were also health crises like Ebola in the Democratic Republic of Congo. So these challenges were already prevailing before coronavirus struck. And also, most of these African economies have been over-leveraged. The debt-stock ratio compared to GDP in Africa is over 40%. That's quite high. And we know that a lot of them are asking for debt relief, waivers, and what have you. So that, with that said also, the level of infection cases in Africa, if you compare it to these other continents, is actually relatively low, but the economic impact is going to be more severe. The poverty rate is quite high in most African economies. Also, if you even look at the per capita income, because most African economies have a large population base, so the level of income per individual is quite small. And definitely this is going to have an impact on the economy. So the countries such as Ghana, Senegal, Ethiopia, that were among the fastest growing economies prior to the coronavirus, are definitely going to experience sharp declines. But it's not all gloomy, because even these countries that I've mentioned, because also in terms of their population size relative to the likes of South Africa and Nigeria, they are smaller, so they obviously may record a faster pace of growth. So definitely we're going to see that sort of like an uneven recovery amongst African nations. And again, as the global economy starts to pick up, because the African economy is the recovery of the African continent is subject to the recovery of global economies such as the US, China. So as global trade picks up, as economies start to recover and to reopen, we should see that play an impact on African economies. So we start to see remittance flows increase and what have you. So it's just that obviously it will take a longer time compared to other continents, but it's not just all bad news.
But of course, the governments are not just sitting back and folding their arms. So how would you rate their assessments? I mean, how would you assess, their response to ensure that this pandemic doesn't have, a dire impact on the economies?
Well, in all fairness, I would actually say that most African governments reacted quickly. But again, it just speaks to the amount of resources available to them. They don't have the infrastructure. They don't have the institutions. They have a lot of weak institutions, a lot of political instability and bureaucracy, high corruption. So these challenges actually, it's not as if it's not present in the developed economies, but obviously it's more pronounced in Africa. So it's these challenges that actually are going to make the impact more severe on African economies.
Now let's talk about the latest developments in the crude oil market. Of course, this morning we saw Brent trading at about $42 per barrel. The volatility in that market continues.
Yes. Okay, so right now, like yesterday, the news about Saudi increasing its oil price to its Asian market obviously supported oil prices. But as at this morning, there's information about the fact that the rising coronavirus cases in the U.S. could dampen oil demand. And the U.S. gasoline inventory report is going to be released soon, and there are forecasts that it might increase. So this actually dampened market sentiment about oil prices. But with that said, it's a commodity, so it's definitely volatile to oil prices. I mean, to external shocks and what have you. But the thing about the oil market is right now, it's also a function of demand. We know that it's the major market, so China, Europe, these countries are beginning to reopen. China recorded a GDP growth rate of about 1.1% in Q2 from a contraction of 6.8% in Q1. So just shows that the largest oil consumer is already showing signs of a recovery. Also in the US. So it's definitely those factors are going to be playing on market sentiment. And as long as there's that risk of a resurgence in infection cases, it's still going to keep prices low. But then also the supply cuts, compliance levels are increasing. So on one hand, you have the factors that are going to support prices. On the other hand, you have those that would limit whatever price gains are going to be recorded.
Now, bringing things closer to us now, the CBN has issued a 6-month ultimatum to regional banks to expand their operations. Of course, the CBN says that this is to promote the spread and balance of regional banks across Nigeria. But looking at the time when there's a need to promote virtual banking and social distancing due to COVID-19, do you think that, what do you think about this?
Well, first of all, the CBN's plan is actually to increase financial inclusion, and the rate is about 63% right now in the country. So that's not bad, and they're aiming for 100% financial inclusion. So that directive is just to try and at least broaden the base the base of people that have that are exposed or have access to financial transactions and banking services. But now, with that said, again, it's occurring at a time where there's now that shift to virtual work. And so what it just means that obviously banks will need to be more creative. So obviously that shift from the brick and mortar model to actually, oh, can I conduct my transactions online? So for instance, we know that e-payment transactions increased in the month of May. So that just shows you that there's that shift towards electronic platforms. So definitely, even if, fine, as a bank, you need to expand to another geopolitical zone, maybe the number of branches that you would require or you are going to open might not be as much because now there's more focus to virtual. So banks just have to be more creative and strategic even in carrying out the CBN's policy.
Now, let's talk about the movement in the external reserves. Now, we've seen that they've continued to decline steadily, and the currency stand at $36.1 billion.
Yes, okay, so the decline is because we are not receiving as much forex inflow. So we've talked about oil prices. So definitely at $42 per barrel, that's still we still bring some sort of comfort. But bear in mind, again, oil production in Nigeria is being pressured to comply with its OPEC quota of 1.4 million barrels per day. So we might still see further reduction in production. So that definitely oil proceeds are a little shaky at the moment, and remittance flows are declining also. So that pressure we are beginning to see, or we've been seeing and we'll continue to see on the external reserves. And why we saw an initial increase was because of the drawdown from the IMF loan. So obviously, as World Bank, we're trying to get about $1.5 billion also. So the more international funds we get, obviously, it would boost the external reserves. But the forex demand pressure is still there. We know that airports are going to open, at least for domestic flights, and are considering resuming or reopening international flights. Once that starts, then the forex demand pressure would heighten. And as that increases, obviously, there'll be more pressure on the external reserves. But now, with the CBN talking about the unification of exchange rate, obviously, there's going to be some adjustment. We already know that the retail forex rate is being moved to 318 naira per dollar from 360. So the more expensive it is to buy dollars, obviously, is mopping up naira liquidity, and that should address to an extent the forex demand pressure. So at least in the short to medium term, we may see some relief or respite in the depletion of the external reserves.
So with all of this now, where are we in terms of commodities prices, and give us an outlook?
Yeah, so for commodity prices, so for instance, we're still in the planting season, but towards the end of Q3, we're going to start, the harvest season is going to commence. And once that happens, obviously output is going to increase, and that should bring down prices. But again, that risk of a resurgence in infection cases, because if the country is forced to reimpose a lockdown, so for instance, in Florida in the US, they've reimposed a lockdown in certain parts of the city. If that happens, then all bets are off. So it's back to square one. And the impact of a second lockdown may even be more severe than the initial one. But with that said, obviously, once the harvest season commences and output increases, prices should ease. What
about oil prices? What are your projections for the coming days?
Well, for oil prices, I think oil prices are still going to remain around the average of $40 to $45 per barrel, because it's clear that OPEC members and their allies, they are adhering to their quota. So definitely the supply cuts will continue to help boost prices. But and also the improvement or the pickup in demand in China and US and Europe. So all this would support prices. But again, there's still a large supply glut in the market that would limit whatever price gains would be recorded from these supply dynamics.
Head of Research at the Financial Derivatives Company, Damilola Kibame, thanks for coming on the program.
Thank you.